Fine? Yes. You understand this, you will understand the basic thing. Make sure that you will explain fully the risk of the statements. Basically, when you are talking about the audit risk, you have to focus only on financial statements. You won't get full marks for simply writing down the risk factor. This is one of the reasons we think that we have written the answer, but we have not written the answer in the right way. Okay? When financial statement risk might arise of inventory, is it right? What we have to do, if assume in terms of what? In terms of inventory. Net realizable. See, inventory is IAS 2. Is it right? Inventory is IAS 2. We will cover this. Is it already? Because why we are not doing this? We assume that we have done in financial reporting. Is it right? If we take inventory, inventory has two methods. Is it right? The valuation of inventory. Only two methods. As simple as that. Only two methods. Make it very clearly. The first one is we are talking in terms of what? Yeah. There are only two methods. The first one is lower the cost. Is it? Lower the cost. The second one is net realizable value. Inventory comes in IAS 2 as such, International Accounting Standard 2. Here, what financial statement risk might arise from inventory? Risk that the net realizable value is a NRV. We always say it is what? It is NRV. In short terms, you can use it that of inventory is lower than the cost. Means which one is the lower? Whether it is a net realizable value or lower the cost. I will tell you slowly and steadily the moment we'll discuss those things. Okay? We are talking in terms of that. The audit response should be very specific. Is it right? Write down the things like, see what they are mentioning is, they are mentioning very clearly. Is it right? Whenever you will make it a point, you should say that discuss with the management is vague. Just you should not say general, discuss with the management. They are asking you very clearly what exactly the auditor needs to discuss. Is that you should not write only discuss with the management. What you need to discuss very specifically, you have to write the point. Is it right? Don't say that, don't write that discuss with the management. Is right? Next, suitable response to each risk may also depend on the particular circumstances of the client. Why it is needed, what it is receivables, it is inventory, it is in terms of receiving the inventory, issuing the inventory. Is it right? Specific response you have to be very clear. First you understand this. Is it right? These instructions are very, very important. People don't read these instructions, just they will prepare for examination, but that is not the case. You should understand what are the requirements. What I am need, you have to do that. Is that? And the environment in which it operates. Make sure that you tailor your response, you recommend, so that the appropriate to the scenario. What is needed is you have to write. Okay? It's very simple. I'm telling you, very easy as such. If an exam question presents you a scenario and asks you to describe or explain the audit risk, you should not define it. Is it right? See, that is the difference. There is a describe, there is a define. Is that? These are the verbs. You should make it. Define means it is a definition. Is it right? We are not talking about the risk. We have to describing what is the scenario, how we have to work out on that scenario basis. Is it right? That's very important. You will not get marks for doing so if you have not it was not required by the question. 100% if it is not there, they will see. Very simple. If it is not as per the requirements, we think that yes, we have written and we are not getting the marks. What we have written and what their expectation, there is a huge gap will be there. It will not work. Is it right? Including some superfluous. Don't write high language. They don't focus on language. Very simple. I'm telling you, they focus only on content. Is that in your answer will not gain you any credit. Don't say that I have to give good language. See, this is all over the world. Is it right? English language comes second. The content will come first. And will waste valuable time in time pressured paper. Is that the moment you will close your eyes, open your eyes, 3 hours will be over. Okay, that's very, very specific. Read these instructions again. Is that? Now, they will give you a scenario. First and foremost, keep it in mind. Is that? Whenever you will get a question, don't go read the question. Understand what? Don't read the. First, you go to the bottom and you see what is the requirements. This is not, I am not giving this instruction. This is the instructions given by the ACCA. This is the purpose of telling you 15 minutes reading time. When we say 15 minutes reading time, they will not ask you. The moment you read the question, the 15 minutes will go like this. Isn't it? The first 15 minutes, only every question you read requirements. The moment you read requirements, automatically you know what you have to identify in the exam, in the scenario. What they say, calculate an additional 3 ratios for both the years, which will assist the audit senior in planning the audit. For review, first you have to calculate any 3 ratios, additional 3 ratios. They have, is it right? Next, 3 marks. For a review of the above information and the ratios calculated, what are the 6 audit risks? Is it right? 6 audit risks, and what is the audit response? Is it right? What is the audit risk and what is the audit response? Got my point? 3 ratios, 3 marks. Okay? And 6 ratios, 12 marks is what? 6 for audit, identifying the audit risk, and 6 marks for the planning for the audit response. Got my point? The moment this is where, see, this is my advice, my instructions, my suggestion. It is not given by me. It is you take any ACCA book, it is given that the purpose of 15 minutes is only to read the questions as such. Got my point? Automatically things will be read once, read twice, understand it, recollect it, what we have to do. Be very specific. Automatically things will. Even when I am explaining the questions in all through the classes till the end, first and foremost I will go through the questions first. Then I will come back to the scenario. Sometimes if by mistakenly if I go to the scenario, you have to remind me. Okay? That is what it said. Now what we have to do, we have to calculate, we have to understand that we have to calculate 3 ratios, 6 audit risk, and 6 response as such. Is it? Now, once you have done this, you go back to the things what happens. They say what? 6 additional ratios. Is it? See the things. What they say that 6 additional ratios. Means already they have calculated some ratios. Apart from those ratios, we have to calculate other 3 ratios. Is that ratio analysis will be keep your calculator ready with you. All through the classes, calculator has to be there. Fine. Now, now you read the scenario, you will understand. Fine. What it says, you are a audit senior. Always assume you are an auditor. Okay. That's very simple. And are planning the audit for Walters. Is it right? And planning for the Walters asset. Now, for the year 31st December 2004. The company produces printers and has been client for your firm for how many years? 2 years. Wherever you will find something, you highlight it. In the examination also you can do it. Is it right? Your audit manager already has a planning meeting with the finance director. Fine. He has provided you with the following notes of his meeting. Is that financial statement extract? Extract means they are not giving you complete financial statement. They gave you the things what you need. Walters management was disappointed with 2003 results, and so 2004, they have undertook number of strategies to improve the trading results. Fine. 2003, the results are not good. Okay, fine. They have taken number of strategies. This is the risk. Is it right? When the things are not moving well, is that you are talking about strategies. Is it right? This includes the introduction of a generous sales related bonus. Fine. Generous sales related bonus. See, when the market is down, is it right? When the market is down, definitely what will happen? You are asking the staff, is it right, that you increase the sales, is it right? You increase the sales, and automatically what will happen? They assume that, is it right? They assume that the sales will increase. For this, what they are doing? They are giving the bonus. Now, what happens? See, as a matter of fact, I am telling to myself, is it, if I am a salesperson, if I am going to say that yes, they will give you attractive bonus for me, I will sell X, Y, Z. I don't want. I want to show only what I want to show only numbers. Is it right? I want to show only numbers. That's all. Because the numbers are increasing. Because most of the time, this will be credit sales. Credit sales. Now you are selling. You will get it after 90 days. Is it right? What happened 90 days after that? Nobody knows. Is it right? Some people will pay you. Some people will not pay you. Is it right? You are forcing. Is it right? What you are doing? You are forcing the sales. When you force the sales, then you have to think, this is nothing but an audit risk. Is that? This is nothing but an audit risk. Slowly you have to build up the things thread by thread. Okay? Generous sales. Is that? I will put one number here. Is it right? This is one of the audit risk. And the salesman and a high profile advertising campaign. See, when the markets are not good, even you make a campaign, there will not be that much response. Is it right? People are not willing to buy. What you will do? Is it right? People, you should be clearly, when markets are down, the risk is very high. Is it right? If you are making a high profile advertising campaign, spending huge amount of money on the campaigns, definitely you have to think over it. Is it right? Fine. In addition, the market conditions are difficult. Everything is not working well. Is that difficult for the customer? They have extended the credit period. Is that? See, what will happen? See, the rule says that the maximum. See, these are the things you should know. You should know. Is that maximum period of credit? What will happen? Maximum period is 90 days. If you are extending, what will happen? If you extend, assume that you are extending to 120 days. What are the implications? That's very important, isn't it? What are the implications? What will happen? The debtors, is it right? The debtors turnover period, is that the debtors turnover period will increase. People will delay payment, is it right? People will delay payment. Is that previously we used to get for 90 days. Now you are going to get for 120 days. Definitely you are getting payment after extending by 30 days. Again, if you take that into consideration, is it right? If you take that into consideration, what will happen? It is a audit risk. Is that? It is the audit risk. Now you can understand. This is what it says. You should be very clear. Now the finance director of Walters have reviewed the inventory valuation. Fine. They have reviewed the inventory valuation as included additional overheads incurred this year as he considered them to be a production related. What he has reviewed and included what? Included additional overheads. The moment you are additional overheads, what will happen? again it will have impact on inventory turnover period. Is it right? Again it will have impact on inventory turnover period. Ratio analysis you have to be very strong. Okay, inshallah. Now that's what it says. Now what they have done is that the Walter director has calculated key ratios. Is that what they have calculated? Gross profit. They have calculated gross profit margin has been increased. Is that 44.4 to how much? 52.2%. It has been increased. Fine. Receivables. See the thing. Receivables has been increased. Previously we used to get amount within 61 days. Now what happens? That we are getting the amount for how many days? After 71 days. It is worth, it is feasible, it's a big question mark. Is that you have to, the receivables period has to be decreased. Is that it has to be less. Fine. He is happy with the 2004 results and feels that they are good reflection of the improved trading levels. He is very good. Yes. Why he will not be good? Because what happens? He is giving what? He is giving a generous bonus to the staff. Is it right? To the sales staff. Is it right? When you are giving generous bonus to the sales staffs, definitely the sales people will sell left, right and center. They will not see to whom we are selling. Credit worthiness will not be there. Definitely in the previous year we are getting for 61 days. Now what's happening? We are getting it our money back within how many days? 71 days. Fine. Which they have calculated which ratios? They have calculated gross profit ratio and receivables ratio. Is it right? Next. See, they have given you some financial statements. Is that we can do? We can do. Who is it? Revenue, cost of sales, gross profit, expenses, profit before interest and taxation. Is that they gave you the financial statement extract also. See the thing. 2000, 2003 and 2004. This is very important. Is it right? The value of inventory has been increased. Is it right? The value of receivables has been increased. That the receivables should be less. Is it right? You should recover it. Why the value of the receivables has been increased? Because here how many days? Here we used to get in 61 days, whereas here we are going to get how many days? 71 days. Definitely. Is it right? The amount is increasing. People are paying with a delay of 10 days. Is it right? There is no cash as such. Getting a point? See, current year there is no cash. It's very strange. Is it right? You don't have any cash, is that? Instead of that, what is happening? There is a overdraft. Is that? There is a over. Now, what happens? Payables. Payables also what happens? Payables is 1.2. Now what happened? Inventory. Is that? Payables comes from where? Payables comes from purchases. Is that? Payables come. Which one? What we are purchasing? We are purchasing what? We are purchasing inventory. Is it right? We are purchasing inventory. Payables means when we are getting the amount, when we are receiving the amount late, delayed, definitely we will be in a position to pay in a delay mode only. Is it right? That's what we are talking in terms of trade payables. Now, what are the things you can calculate? They say additional 3 ratios. Now, you tell me which 3 ratios we can calculate. Anyone? Yes or no? Tell me yes or no, which three ratios we can calculate?
Inventory turnover ratio.
Inventory turnover. Next.
Receivable ratio.
Receivables. Is it? Next, what we are doing? We can calculate. See the thing. It's up to you. Is it? You see what are the thing which with respect to this information, is it? We can calculate inventory turnover ratio. Is it right? Inventory turnover ratio. We can calculate what? Payables. Is it right? Payables. Is it? Next, we can calculate what? Is it right? We can calculate what? We can calculate current ratio. Is it right? We can calculate quick ratio. What happened to Aisha? Yeah. Are you here, Aisha?
Yes, sir, I'm here.
Yeah. Fine. Is that we first we explore, is that we don't pressurize. We know what are the things, how it has to be worked it out. Inventory turnover ratio, payables is there, current ratio is there, quick ratio is it right? Now they have given, if you see in the examination they will not give, okay, in the examination they will not give you this. These are the things which they will give only here, is that they have already calculated gross profit ratio. We don't need this, is it right? They are talking about operating profit ratio. Fine, it is good to know. You can calculate. What they have done, they have calculated receivables collection period. Is it right? What is the operating profit divided by revenue? How much is the operating profit they mention here? Operating profit is how much? Operating expenses, operating profit before interest and tax, 4.5 and 4. Is it right? I will write here. Is that operating profit? Operating profit. Is it right? Operating profit ratio. Is that operating profit? Operating profit margin. Okay, operating profit margin. Is that operating profit margin? They have, see, you have to do for 2 years, 2004, you have to do it for 2004, and you have to do what? 2003. What is the operating profit? Operating profit divided by revenue. Is it right? 4.5 divided by revenue is 23 times 100. Okay. Next, tell me fast. What is the answer? 4 divided by 18 times 100. It comes to how much?
19.5.
19.5. And here it comes to how much?
22.2.
22.2. Okay. See, now you make it a point. What happens? Operating profit margin has been decreased. Is it right? Operating profit margin has been decreased. Very simple. Means you are doing advertisements. You are doing advertisements. You are talking about the bonuses you are giving to the people, staff. Definitely your expenses are increasing. The operating profit margin will decrease. This is one of the ratios. Is it right? We will do this. That's all. Is that next? What they say, we are going to say that inventory holding period. Is it right? Point number 2, right? Anyway, nothing will. I am putting number. Okay. Don't. This is 1, Is that this is 2? Don't get confused. I am very clear on that. Is that inventory turnover? Inventory turnover, inventory. Is it right? Inventory holding period. Is that inventory holding period? What is the formula for that? Inventory divided by cost of sales times 100. Okay. See, you just write it, right, in as short as possible. You don't need to write everything, okay, in the examination. But be very specific what you are writing, okay. Be very specific. Inventory is how much? Inventory is how much? 1.6. Is it right? Is it? Inventory is how much? 1.6. I will write here. Inventory, is it right? Point number 2. Is it right? Inventory. Is it right? 2004 and 2003. Inventory. How much? Is it right? Inventory is 2.1 and 1.6. Is it right? 2.1 and 1 divided by cost of sales is how much? 11 and 10. Is that cost of sales is how much? 11 and 10. Multiply by how much? 365. How much you will get?
Six 69.7.
69.7. Next. (2.1) divided by 11 into 365, 69.7. Good. 1.6 divided by 10 times 365.
50.
1.6 divided by 10 into 365. 58.4. Is it right? Is it 58.4? 58.4. Is it right? Days. How much is there? Whereas operating profit margin is how much? Operating profit margin, how much we have calculated? 19.5, 22.2. Is it 19.5? Is it 19.5 percentage, 22.2. Next, what is the payables? Payables divided by cost of sales. Payables divided by cost of sales. Payables is how much? 1.6, 1.2. Okay, 1.6, 1.2. Is it right? 1.6, 1.6 divided by 11 into 365. Okay, how much you'll get? 1.2 divided by 10 into 365.
53.1.
53.1 days. Is it right? Next.
$44.
How much?
43.8.
43.8. Next. Current ratio is a what? Current ratio is nothing but current assets divided by current liabilities. Is it right? Current assets divided by current liabilities. What is, how much is the current assets? Current assets is how much? How much is the current assets here? 2.1, 4.5. It comes to how much? 2.1, 6.6. Is it right? 6.6. And here how much? 2, 5, 6, 6.9. Is it right? Yes or no? Current liabilities are how much? 2.5. Is it right? 2.5. Here it is how much? 1.2. Okay? 6.6 divided by 2.5 and 6.9 divided by 1.2. Is it right? Just Just help me out, okay? 6.6 divided by 2.2, 6.1 divided by 2.1. I am right or wrong? 6.6 divided by 2.2, 6.6 divided by 2.5, 1.6 divided by 1.6 divided by 1.2. Is that 6.6 divided by 2.5, 2.5 and 1.6, sorry. Is it right? 1.6 divided by 1.2. How much you will get? Yes.
2.6.
How much?
2.6.
2.6. Yes. Next.
1.3.
1.3. 1.3 and 2.6. Fine. Next. What is the quick ratio? Quick ratio is divided by 2.5 divided by 1.2. Is it right? Minus inventory. Current assets minus inventory. Current assets minus inventory. How much is there? Current assets minus inventory. 6.6 minus 2.1, 4.5 and 4.5 and 5.3, 5.3 minus 6.9, 6.9 minus 1.6, 5.3. How much it is? 1 minute. 6.6 minus 2.1, 4.5, 5.3. Okay, just check. Okay, 4.5, 5.3. Is that 4.5? 4.5 and it is 5.3. How much you will get?
Sir,
Yes.
1.8.
the current ratio, the second one is 6.9 divide 1.2.
Okay. Thank you. Thank you. 6. .9 divided by 1.2. Again, this will also change. Is it right? How much?
Yes, it will 5.75.
5.75. And this is right? 6.6 divided by 2.5. And here how much you will get? 5.3 divided 1.2. 4.41. Is it right?
And 1.8.
How much?
1.8.
1.8. 4.5 divided by 2.5. Is it right? It is about 4.5 divided by 2.5. 1.8. Is it? See this much. See, you will find why we are doing. Is it right? See, what we have done. We have to in the yesterday we have done in some way. Is that substantive? You have to compare. Is that compare with the previous year? That's the one thing we want to know. Is it right? This is where we are making the things. We are calculating the operating margin, inventory turnover ratio. Is that these things? Is that all the things we will do? They will not tell you anything. They will not give formulas also. Okay, don't expect that. Is it fine? Now, what happens if the operating margin has been decreased? Is it right? The inventory we are holding for more number of days. Is it right? We are holding. See, inventory is what? We have to get inventory. We have to sell it off. Is it right? Payables also, what happens? Last year we are paying within 43 days. This year you are paying how many days? We are taking more number of days to pay back. Is it right? Now, current ratio. What happened last year? It was 5.75. What is the current ratio? How much you are? How fast you are converting? Is it right? The current ratio has been decreased. The rule of the current ratio is it is 2:1, whereas quick ratio is 1:1. Is that? Because fine. See, you are selling the inventory. You are giving the generous sales. When you give the generous sales, what will happen? Definitely, they will be the inventory will technically decrease. Is it right? That is the reason. Now we have these things into consideration. When you do this, is it right? When you are doing this, whenever audit risk, you take negative things. Use professional skepticism. Is it right? You don't take. You put the arrows so that you will happen. Operating margin should increase. Inventory turnover should decrease. Payable should also decrease. Payable should not increase as such. We want to take any three. You take three. Is it right? You take the first three. You have to plan. That's a very important. If you plan, you will pass automatically 50%. You are pass. You write down 50% is cover up. Is that if you don't plan, it will have very tough for us. Now, got my point? If you take the things, what happens? They are talking about the audit risk. They are talking about the audit response. For this, they will give you 3 marks. Understand my point? For this much, they will give you how much? They will give you 3 marks. Fine. For this, they will give you 3 marks. As simple as that. Now, what are the implications? Fine. One by one. How many they have said? They have 6. Is it right? 1, 2, 3, 4, 5, 6. 6 only they have mentioned. Fine. They have mentioned only 6. Now, see the thing. What we have discussed and what is there, it goes side by side precisely. It goes audit risk and what is the audit. First is, they are offering what? They are offering general sales related bonus scheme to its salesmen. This increases the risk of revenue misstatement. Employees will maximize their bonuses. They will sell as it is it right? What the moment see as a staff is that sales staff. Is that as a sales staff? See, they say that yes, we have to show numbers. Is it right? That's all. We'll say that yes. And then what will happen? There is a credit sales. Is it right? The credit sales period is also increased. Is it right? People will buy. Is it right? People will buy more. Fine. That's the way it will work. Is it right? When you are doing the things, the sales staff will sell have a credit sales, and that is the risk. We should be very clear. What is the response? It is your side, what you are doing. The auditors will need to increase. See, when you are having the sales staff, is that you have to put some limit. Is it right? Yes, you cannot say that you cannot cross 10,000 reals every salesperson. As simple as that. Is that you put the target? That's very important. What you are doing, you have a cutoff. This is a what? This is called as a assertion. This is called as an assertion around the year to ensure that revenue has been included in the current period. You should make it sure. The auditors will need to increase the cutoff testing. Yes, 10,000. Next. What happens in most of the cases? Now we have done this. Is it right? This is the 31st December. Is it right? Now you are somewhere in November. Is it right? You are in the 1st December. Now you are reaching the deadline. Is it right? When you reach the deadline, the sales staff will increase the sales. Is it right? We increase the sales aggressively. Is it right? They will increase the sales aggressively. Because why? They need to reach the target. The more the sales, the more the bonus. Is it right? The more the sales, the more the bonus. And what will happen? these sales will be recovered next year, because what we have done, see the thing, how many things is covering up. Is that when you do the things, they are giving how many days? They are giving credit days of 120 days. Assume you have made sales somewhere in 20th of December. Is that 20th of December? 20th of January, 20th of February, March, April. They will receive somewhere in April. Is it? They will receive or they will not receive. That is also a big doubt. That is the audit risk. Is it? That is the audit risk. You have to make it a point of what? Cutoff testing. Is it? This, when you increase, when you say that we are talking about generous sales, you have to see whether the sales is genuinely made, and as an auditor you should say that yes, it has been recorded in the correct accounting period. The next year sales should not be recorded in this period. Fine, that's all.
Sir.
Pardon?
Repeat again the first audit response.
Yes. See what happens. It is a cutoff, is it right? They are making sales. When they made the sales, deadline is coming. You will do aggressively. Is it right? I take my word. I will give my. I will do aggressively. I want that I should achieve the target. Now achieving the target, next year sales also we will include this. We have to ensure that this year sales will be recorded in this year accounting period, and next year sales should be recorded in the next year accounting period. Is that cutoff? Cutoff means 31st December. We should not. We have to ensure that the next year sales is not included in this year. We are not writing these things. We have to write a summary, very simple. The auditors will need to increase cutoff testing. Cutoff testing means what happened during the last 1 month, what happened during the last 10 days. To ensure, that's what, to ensure that revenue has been recorded in the current accounting period as such. Is it? This is where we are very much concerned about the response. Is it okay?
Yes, clear.
Is it? Fine. Now, what is the second one? See, the increase in cost of sale does not match in the turnover. We have not done this. Is it right? We have not done this. What is the increase in cost of sales? Cost of sales is how much? Cost of sales is somewhere it has been given. Is it right? Cost of sales is how much? Is that increase? How much is the increase? How you have to calculate the increase? 11 minus 10 divided by 10. It comes to how much? 10%. Is that 10%? Current year minus previous year divided by previous year. Okay? Current year minus previous year. Current year minus previous year divided by previous year. Is that right? How much is the increase? Now, if there is an increase of 10% in sales, what they have done? You have to do the same thing here. 23 minus 10 divided by 10. How much you will get? (23 minus 18). Sorry, 23 minus 18. Is it 23 minus 18 divided by 18? It comes to how much? 27.7%. See, thus if cost of sales increased by 10%, revenue should be increased with a margin of profit, okay, with a margin of profit. But revenue is increasing more, cost of sales is increasing less. You should know that what is the reason. Is it right? What is the reason of it's not increasing proportionately? Okay, it is not increasing proportionately. If it is not increasing proportionately, then there is a possibility of an audit risk. The cost of sales has been increased 10%, does not match with the revenue 28%. This gives the risk that what happens, the revenue has been overstated. Is it definitely? See what is the risk we are facing? The risk is the sales has been overstating. This is the problem, that is the issue that has been happening. Is it right? We are having aggressive sales. Is it right? Aggressive sales, and aggressive sales has not proportionately matched with the cost of sales. Means you are selling left, right, and center. Is it right? Now that is the risk. If the cost of sales is increased by 10%, the sales should increase by 10, 12, 15% maximum. It should not be almost, it has been increased by almost 18%. Is that? What we have to do, what is the response? The response is they have to focus on sales and testing the expenses. Is it right? What we have done, in some way they have mentioned. Is it right? What they mentioned, they said that inventory overheads. Is it right? Inventory overheads. Is it right? That have been happened. They should not only test the sales, is it right? Precisely, but also they have to say the expenses. Which type of expenses? Cost of sales. They should also discuss the reason. See, we are not talking about general reason, we are talking about the specific reason. Discuss the reason for the disproportionate increase in the gross profit margin. How much are the gross profit margin increase? They have calculated. Is it right? They have calculated. How much is there? Where is that? Gross profit margin. Gross profit margin has been increased from 44 to 52%. Is it right? It has been increased from 44, is it right? Gross profit margin. Is it right? Margin. It has been increased to from 44% to how much? To 52%. See, when the conditions, listen, when the conditions are not good, when market is not good, when the sales is down, how the gross profit margin will increase. Understand? So how much introspection you have to do. Is that when the market is down, when the sales are down, we are saying that you are increasing the promotion expenses, all those expenses. But what will happen? The market is down, and whereas the profit has been increasing. Cash is becoming from positive to negative. Is it? But the gross profit margin is increasing. You have to discuss this with the management. This much you have to write. The auditors will need to focus on sales testing and testing expenses. They should also discuss with the reason for the disproportionate increase. Don't write general points. Okay? Specifically. Are you clear about this?
Yes.
Next. Okay, slowly. Is that the finance director has some additional overheads on inventory? What will happen? The inventory turnover days has been increased. Is that from 58 days to what will happen? 70 days. We have calculated this. Is it right? We have from 52 days. Inventory may be overstated. Is it right? Inventory means what happens? You are adding overheads. Is it right? You have the inventory. Is it right? Inventory is assumed there is some amount of inventory, plus you are adding overheads. Which overheads we don't know. Is it right? What will happen? The value of inventory will increase. Is it? When the value of inventory increases, it means that your inventory has been overstated. Again, the moment you say, is that you have to discuss with the management, with the director. Who is that? Is that with the finance director? The auditor should examine what are the addition, what are the overheads they have added, which has been included. Detailed cost is a NRV testing. Where I told you in the beginning, when we say inventory, inventory is happened with respect to IS2. There are two methods, net realizable value and lower the cost. You have to discuss with the management which method you have used, why you have added inventory. Is it right? Detail your response. This is your question, as simple as that. This is your question to the management. That is what the audit response says. Is that we are talking, you should detail cost or NRV testing should be performed, and we have to know whether there is any aged old inventory. Is that old inventory or obsolete inventory? We have to note down that we have to discuss. Is that if there is increase in number of days, definitely you should know what is the reason. Is that what are the related reasons? Is that specific reasons about the increase in the value of inventory turnover days? Fine. This is the third one. Now, what they say, gross profit margins. Is that they say that what we have done, we are just taking those ratios only. Is that we are not deviating from that. Is that 3 ratios they have given, 2 ratios they have given, 3 ratios we have calculated 5 ratios. Based on the 5 ratios, we are going to work it out. Gross profit margin has been increased. Is it? Point number 4. You see, one side gross profit margin has been increased. Is it right? One side it has been increased, whereas the operating margin has been decreased. Is that that's a common sense? Is it right? When the gross profit margin has been increased, operating profit margin has also should be increased. Otherwise, what will happen? Maybe your cost of sales is less. Is it right? Cost of sales proportionately. Is that cost of sales is less, whereas the operating expenses are more. Is that this is what happens? Is that cost of sales has been increased by how much? Cost of sales has been increased by 10%. Sales has been increased by 28%. Is it right? Expenses. Is it right? This is what we have to analyze. Is it when the gross profit margin has been increased, what is the reason why the operating profit margin has been decreased? Whether there is any mismatch between what? There is any mismatch between cost of sales and operating. What is the response? You ask them to give the breakdown. Is that you want to know, to establish whether there is any misstatements between the two. Incorrect allocation is otherwise called as a misstatement. Is that incorrect means you should ask what is the reason. You put in your own words. There is no hard and fast rule that you have to write in this. This is an idea. From this you are getting only an idea. Okay? You put in your own simple words. Things will work. Now, receivable days has been increased. Is it right? From 61 days to how many days? To 71 days. Is that the customers are taking more time to pay? What will happen? The receivables has been overstated. Customers are unable to pay. Is it right? If they want to pay, see, everyone wants to pay as early as possible to get the discounts. Is it right? To get some discount. Now what happening? They are paying for almost 71 days. Is it right? The number of days has been increased. It is a cause of concern. What is the audit response? The audit response is you have to carry out detailed substantive testing on year-end receivables. Is it? You have to not only do this, you have to see that how much you are receiving at the end of the year. Is it? See, the reason is you are going to collect money from your clients. Is it right? You will pressurize your clients that at the end of, by the time we are reaching the year end, that give us money so that we can account this year. Is that if you are not getting the money as on time, definitely we will make sure that these receivables are called as aged receivables. Aged means old, which is not recovering. Is it right? Not recovering on time. Is it? Not recovering on time. Definitely. See the things. As simple as that. Markets are down, sales is not there, you are giving generous bonus, salespersons are selling at their wish and will, they are not evaluating the debtors properly, there is no evaluation, the XYZ they are selling, what will happen? The receivables will become aged. Aged means the number of days of receivables are increasing. The clients or debtors are paying on a delayed period. Is it? That is the one. The sixth one, very, very easy. Is it right? The company now has a significant overdraft. Last year they have the cash. Is it right? This year they have the overdraft. That's the cause of concern. Is it right? It means your liquidity position is not good. It gives a concern of a going concern risk. When markets are down, is it right? When markets are down, when receivables period is increasing, is it? Receivables period is increasing, payables period is increasing, is it? Payables period is increasing, inventory is increasing, is it? Inventory turnover period is increasing. Fine. Now operating profit has been decreasing and cash is negative. If you take all the things into consideration, we are not sure that the company will continue. It is a going concern risk. Is it a going concern risk? The auditor should discuss with the company can continue as a going concern. Is that means if so many things are going negatively, can we survive? See, as simple as that. If things are going so bad, definitely most of the companies will become bankrupt. They will close down the things. They're concerned what is the response of the auditor, that you have to discuss with the management whether it is a going concern issues are there. You have to do a detailed going concern review, including what they are saying, that including they are talking in terms of what, including forecast and budgets. This gives you, first time it's giving you a practical experience about how we have to work it out. What is the audit risk and what is the audit response. Fine. We will do many questions on this, as many questions as possible. It is very important area. It will be tested again and again. And most of the time, whenever they will give you this type of questions, they will ask you to do on the basis of ratio analysis only. Is it okay about this? Is it clear? Is it? Your voice will be, I can understand with your response of your voice. If your voice is yes, immediate and very positive, it will reflect. Is it right? It's not difficult. I'm saying this. Only thing is you have to make it. The more you practice, the more you understand, inshallah. Fine. Next one. This is 2011 question. Fine. They say Donald company operates. Can I start this one?
Mister, can you go back?
Yes, please.
Right? Just give me 1 minute. I want to write something.
Okay.
Done, Mr.
Fine. Now, is it? What is that? First and foremost, make it a habit. Make it a habit. First, straight away, first 15 minutes, you read the questions. Is it right? What they are asking us, use the information provided. Is it right? Use the information provided. What are the 5 audit risks and what is the audit response? Is it right? The more you do, your confidence will increase. As simple as that. Fine? 5, 10 marks. 5 for that, 5 for this. Is it right? That's all. They have not, yes. Is it? No. What they say, how you have to approach. See the things. First, notice the requirements. First, you see what is there. They are asking you 5 audit risk and 5 responses. Is it right? You have to describe the audit risk and explain. One side you have to describe, one side you have to explain. 1 mark for each, 1 mark for the go through scenario line by line to pull out the areas of risk. This has been done for you in the next 2 slides in color. Fine. We will follow our own approach. Always make sure that, is it right? Always make sure that you should have a columnary format. Is it right? 1 column for the risk and 1 column for the response. Use the table rulers to improve your presentations. Fine. That's what it says. Okay. We'll understand in our own way. Fine. Now, when you are doing this in the examination, if you have computer based examination, you can highlight the things. Okay. You can highlight the thing. Highlight here. Now it's clear in our mind that there is 5 audit risk and 5 audit responses. Fine. You are an audit senior, is it? You are an audit senior and you have started planning, is it? You have started planning the audit. Your audit manager has asked you to have a meeting with the client and identify what is the risk so that the audit plan can be completed. From your meeting, you ascertain the following. Fine, good. In order to expand their flight network, is it right? Donald company will need to acquire more aeroplanes. Is it right? They have placed order for another 6 planes at estimated cost of how much? At estimated cost of, is that what? At the 6 planes, is it right? At estimated cost of 20 million. And the company is not sure. Here only we got the things. Is it right? Company is not sure. This is one of the audit risk. Whether these planes will be received in the year end. They are not sure that they will. In addition, the company spent 15 million on refurbishing the airplanes. Is it right? They have spent how much? In order to fund the expansion, they have taken the loan. And the most specific thing is they didn't get any response from the bank. It has yet to hear from the bank as to whether the bank will lend them the money or not. Third one. Automatically, the moment you write, you have to do like this. Is that you have to do like this. Now, fine. We'll go further. The company received bookings from travel agents as well as directly through website. Travel agents are given a 90-day credit period. Is it right? Point number 4. Is it? The travel, they have given what? They gave you a 90-day credit period. However, see the things. However, due to difficult trading conditions, a number of receivables are struggling to pay. Is it right? This is another point. Is it right? This is point number 5. Is it? This is point number audit risk. The company's website was launched in 2000 and consistently they have difficulties and there is a complaints. Point number 6, audit risk. The tickets have been booked and paid for online, but Donald company has no records of them. Hence, they sold the ticket to the another customer. Again, there is a audit risk. 7. Donald company used to sell tickets via large call centers located to the head office. However, in May 2001, they closed down and it made the workforce redundant. Point number 8. Is it right? Point number 8 as such. Got my point? Now, is it right? Anything else? If you go further, fine, that's all. How many they are asking us? They are asking us 5. Is it right? This is what is the audit risk and what is the, if you are saying the travel agents are given a 90-day credit period, is it justifiable? What is the audit response? Audit response is that you have to ensure that within the 90 days credit period, the receivables period should not exceed. Is it right? The second one is that number of receivables are struggling to pay. Again, struggling to pay, going concern problem. Anything happens on cash, anything happens on receivables, it is a going concern. Is that the website has been not functioning properly? Is it right? They say that they consistently encounters difficulties with customer complaints. They are selling the same ticket to 2 people. They are selling it on online as well as at the office. Is it right? There is an audit risk. Once you are selling ticket, again that ticket has not to be sold. That has to be blocked. Is it right? Otherwise you will have 200 people to fly. The number of passengers will be 300. Is it right? This is the way it will happen. In the same way you have to work it out. Are you clear about this? They have applied for the loan. Is that, see what happens, they spend 15 million. Is it? They spend, in addition the company has spent 15 million on refurbishing the existing planes. In order to fund that, they have spent before they receive money. First thing. And they have spent before they get the approval also. You have to inquire with the bankers that discuss with the management that whether the loan application is in which stage, whether the loan will be sanctioned or not. Discuss specifically, no general discussions. Is it right? They say that they have ordered 6 planes, but these planes will not be received on time. What is the audit response? This is the audit risk. Is that you are ordered the planes, you started booking. Is it right? It is the risk. Is it right? Now what is the response? Whether if you have ordered it, what is the timeline? Whether we are going to get it on time. If it is not going to time, how you are going to manage the bookings? Is it right? Likewise, first you identify different points. Is it right? Now, once you have done this, they have also done. See, they have also done the same thing. They placed the orders. Is it right? They estimated 15 million. They have taken the loan. They have not heard what we have done. They have done the same thing. Is it right? Next, the number of receivables are struggling to pay. Website is not working. Is it right? They have customer complaints. They are booking the ticket twice. Is that they have not mentioned the points? We mentioned the points. Is it right? And some of the workers has been made redundant. Redundant means definitely what will happen if you are not getting planes on time. There is no work for the workers. Is it right? Or there is another way of putting it on a layoff terms and conditions. Is it right? They are not usable. Unproductive labor is there. Is it right? Now, the same thing, simple. See, I'm again telling you, don't get panic that we have to write. You write, I will check this. You write in your own words. Is it right? In your own words. I will give this type of question not this week, next week. Understand? Next week there will be a question on audit risk and audit response. Fine? Now, what they say, the first one, is that what is the first one they say? They say that they have spent 15 million on refurbishing. Is it right? This is very material amount. It's not a small amount. Is it right? And this will have a risk that the cost have incorrectly accorded with the revenue and capital. See, when you are having the refurbishing, is it right? If it is, see, refurbishing is that if we are saying it is 15 million, refurbishing cost, is it right? Refurbishing cost is a long term. Is a long term. And it has to be capitalized. And shown in where? Shown in the balance sheet. Financial statement of financial position. Statement of financial position. You know they have done it correctly. We are not questioning them. But what you have to do? You have to make sure that whether it has been correctly done or not correctly done. Is it right? We are not questioning them, but we have, for our satisfaction, there is a risk. Maybe they have capitalized it, they have not capitalized it. What they have done, we have to make sure. Increase substantive testing in this area. You have to get a schedule, is it right? To know that how they have been tested, whether it is capitalized or it is revenue. Select a sample of testing to ensure correct accounting treatment of cost, whether it has been capitalized or it has been revenue. Revenue is repairs. Maintenance is a revenue expenses. Income statement. Revenue cost is nothing but revenue cost will be shown in, I will put it, don't say revenue is the sales, what is it, right? Revenue is shown as an expenses in income statement. Revenue cost. Less than 1 year, it is revenue cost. More than 1 year, it is a capital cost. Don't mix it with the revenue is sales. It is not like that. Okay. Next, that's the very important. Fine. You should make it a treatment whether they have classified it correctly or not. Second thing, what they say, the company had applied for a bank loan. Is that this is the risk that company cannot continue as a when you apply for a 25 million bank loan to purchase new planes and you are not getting new planes on time, there is a risk. Is it right? The company has applied for a bank loan to fund the purchase of new planes and refurbishing costs. There is a risk that the company cannot continue as a going concern, because see, we understand the moment, see, these are the links, these are the techniques of answering the question paper. Is it right? The moment you find receivables, any issue with receivables, any issue with cash, immediately next moment you think about going concern, that whether the company will be there in the next year or not. Is that is the most specific one. going concern. If the loan is not approved, if the loan is not approved, definitely what will happen? You cannot be in a position to pay to buy the aircrafts also. Fine. Discuss the progress of loan application with directors. We are discussing specifically about what? Specifically about the progress of the loan. Is that? Now, if the loan is not going to be received, is there any other channel where we can get money? The auditors should ask them. Is it right? If there is any channel, the things should not stop. Is it right? You should have plan B. You should think that yes, there is any other option is there to get that much money. If it is there, fine, good. If it is not there, then there is a issue as such. Perform a going concern, looking at what? Looking at the forecast and projections for next year. Is it? That's the first thing, is it? Now, there is a risk that the receivables balances has been overstated. You are selling the tickets, is it right? You are selling the tickets online, you are selling the tickets at the workplace, and you are selling the tickets to the same ticket to the more than 2 people. What will happen? Definitely there will be a issue with respect to what? Receivables. And what happens? You are giving it to a travel agents. Definitely you cannot recover from them. Is it right? There will be a risk that you cannot recover from the travel. See, it is ultimately travel agents are what? They work on commission, as simple as that. They work on the turnover. What they will do in future, they will say that I have not received the money. That's all. I have sold it. But they are not responsible. Is it right? Their concern is only to sell. That's all. Is that what happens in future? That amount will never be recoverable. This is the audit risk. What you have to do? You have to get receivables confirmation. Underline this. Write down separately. It's a very important concept as such. It says that, see that whenever there is a issue, is it right? Whenever there is a issue, you have to see, you are selling to travel agents, is it right? You are selling to different travel agents, X, Y, Z, is it right? As on 31st December, you have to get the closing balances to be recovered. Is it? Closing balances to be recovered. This is called as a confirmation. Is it? Either you are getting on 31st December or you are getting at the end of every month. We have done this control risk. Is it right? In the control risk, what we have done, we have learned something about reconciliation. Is that control risk? Is that? Remember, control risk, one of the control risk is we are doing reconciliation. You have to do reconciliation with the travel agents, whether your balances and their balances are matching or not. How much they is it right? Whether any receivables, is it right? Any receivables are aged, old, is it right? Any receivables are aged. You have to see, you have to take, the response should be immediate, is it right? The response should not be delayed. Whenever there is a receivables issue, you have to get the confirmation from the travel agents and you have to do a reconciliation. Discuss with the directors what is the allowances for irrecoverable debt. See, you have done, if you remember rightly, is it right? You will have receivables, is it right? You have receivables, some amount will be there. Is that what you will do? You will have provision in accounting, is that provision for bad and doubtful debts. Is it right? Doubtful debts. Is it? You will have this provision. You will deduct this from the receivables and you will have the net receivables. You should discuss with the directors whether they have made any provision for irrecoverable, provision for bad and doubtful debts. Is it right? That so that there should not be any issue in future. Are you clear about this? 1, 2, 3. Fine.
Yes.
Is it right? See revise this. Okay, revise this. That's very, very simple. Okay. Now, point number 4. Is that point number 4? What is the audit risk? See, website has encountered problems. Is it right? With respect to dissatisfaction of seats has been double booked. Is that there is a problem in the website? Is that what it's risk? Is it right? There is a risk that the company having to refund customers and therefore overstating the revenue. What will happen? You are booking the same ticket twice. The revenue will increase. Is right? The sales will increase. But ultimately, what will happen? You have to have returns also. Is it right? What the auditors will do? Auditors will schedule tickets. Obtain the schedule of the tickets which has been double booked for the sample. You should ask what is the history. You have the questioning mind. Is it right? You ask what happened, what is the reason, to whom you have been repaid, why there is a double book has been done. Follow to ensure that whenever we are double booked, to whomever we have refunded the amount, that has to be verified that it has been correctly refunded or not. It happens in some cases. What will happen? They are booking. There is a problem. It may be happened. Now, what is our response? When we say it is audit response, low acceptable level. Is that's what they say. You have to reduce the risk to the lowest level. Is that there will be a risk, but risk should be lowest level. You have to obtain a schedule, the list of the tickets that have been double booked. Is you take the sample. Okay, on that sample you see whether it has been returned to the right person or not. It has been returned to the right person, and the reason is because it has been double booked. Automatically what will happen? Things will be straight. Is it? Now, the closure of the call center. Is there one redundancy? Is there what happens? There is a redundancy. That means there is a closure of people have been laid off. Is it right? The closure of the call center in May has already been announced, and so a provision. See what happens, as simple as that. I will tell you a simple example. Is it right? What happens whenever you are laying off the staff? Is it right? You will give how many months notice? You will say 3 months notice. Is it 3 months notice? Now these 3 months notice you should make some provision. Is it an estimated amount? Is it an estimated amount? If you are laying off some employees, you cannot say that yes, one fine day you will wake up and say that you don't come from tomorrow. You cannot do that. Is it right? You have to lay off properly by giving them sufficient notice and with sufficient pay as such. When you are going to say that they will be a redundant, they are not going to be used further, you should make sure that they should be paid for the rest of the period. Or we have planned that amount or not. That is the provision. Discuss what is the response. You have to discuss with the management the provision required with respect to the redundancy. Is it? You have to discuss with the management. In all through the day time, whenever we are discussing with the management, we are discussing specifically the specific reason. Is it right? That is why they have cautioned us They gave us the instruction in the beginning. Don't discuss generally. Be very specific. Is that review the calculation? Definitely, is that recalculate. Yeah, we have to recalculate, and sometimes you have to reperform. Is it? You have to reperform. In this case, what we are doing, we will recalculate the provision, whether it is right or wrong, whether they have done it correctly or not. Review draft account to ensure that it has been disclosed. With respect to what? With respect to the call center. Is it? This is the way the things has to be done over a period of time. Is it right? Again, I will just go through it. What we have to, if they have taken 15, see, you write in your own words. I am telling you this very clearly. Don't get panic. The moment you get panic and you say that I want to write in this standard, even I cannot write. I will tell you very simple. Is it? If I want to write, I will write in my own words. Fine. But what is more important is you have to know the understanding the way it has to be presented. The 15 million on repurposing the existing planes. It is a material amount. The risk associated, whether it has been done in a revenue or it is done in a capital way. You have to substantive. Substantive means detailed testing. Get the schedule of the things, that whether it has been done correctly or not. As simple as that. We are not going into detail. We are just want to make sure that it has been done correctly or not. Here 25 million amount has been borrowed. Application has been made, not borrowed. Application has been made. Is it applied for the loan? But the bank has not given any approval. What we are doing? You have to discuss with the management. What is the status of the loan application? That's all. If you write this much, it's the things we are achieving our purpose. Is that there is a receivables have been increasing. You have to verify with the travel agents, because the travel agents are the people who are in between the company and the customers. We have to get the confirmation from what is the response? You have to get the confirmation from the travel agents, and you have to make a reconciliation every month, so that you can keep track of that, control risk. Is that next? What we are talking about? We are talking about if there any double booking are there, how we are going to repay it back. Is it? You have to obtain a schedule, means obtain the list to whom they have all repaid it back, and we have to make sure that yes, the reason is because it has been double booked. That is the reason we are paying it back. Otherwise, what will happen? You will refund the amount to anyone, XYZ, whether they have done booked or they have not done booked. What is the response? The response is you have to refund the amount only to those people who are booked twice. Is that? Who are second time who have been booked. Is it right? The same ticket has been sold to the second person. And for only those persons you have to make a refund. Is that? And when there is a redundancy, there is a provision for redundancy. Is that? You have to discuss with the management that whether the provisions has been done or not. Understand? This much minimum, if you have written it, almost you are done with the case. Is it clear about this? Yes, Fatima and Mehta. Fine? That's good. What we will do, yes. Is it right? Multiple choice questions for risk. Okay, section A. Fine. Okay, good. I have given you the answers also. Is it right? I gave you the answers also. Just send me the time. Only one person has sent. Just send me the time when you have done. Is it right? And next time onwards, see, listen carefully. When you are doing the quiz on Friday, the moment you complete the quiz, send one message individually. Okay, complete, done. That's all. Is it right? Send one message. Immediately, if you have done at 8:10, the moment you submit, is it? Send one message that it has been done. Then immediately, not immediately. The moment I will come, I will check, I will correct it. I will send you back. Okay, so that I can keep track of when it has been. I can track only with respect to the timing. Okay, Inshallah, don't worry about it. Now, what it says, we will do this is that you have received the latest management accounts from your client. We are doing Kaplan. Next week onwards, we will do for BPP. Okay, BPP little bit testing. Is it right? And very interesting also. Don't worry about that. Yeah, you have received a latest management account from your client, experience company. Fine. To help with your risk assessment for the forthcoming audit. The management accounts show actual results for the year to date. So it is year Y. Is it right? Year to date. January to October inclusive. Very, very specifically. Okay. In October, Experience received a claim from a customer as a result of defective product. Fine. Good. What it says, which of the following is an example of an audit risk? Is it? Which one is the audit risk? Is it? The client is being sued by customer for defective products, and if they lose, see, audit risk is related to what? Audit risk should be related to financial statements. There are two types of risk, is it right? There are two types of risk. That's what we have to make. One, we are talking in terms of audit risk, and the second is what? What is the second one? Aisha, Fatma, Mehta and...
Business risk.
Huh?
You mean business risk?
Business risk. We have done, is it right? We don't focus. I told you in the beginning also, we don't focus on business risk at all. Take my word. We will never discuss on business risk. We only discuss on audit risk as such. Which of the following is the audit risk? Again, audit risk, is it right? Inherent risk, control risk, and detection risk. Is it right? Multiply, multiply. Again it is, second, I'm saying, it is a sampling risk. Is it right? It is a non-sampling risk. That's all. It is almost a revision for us. Is it right? It is a non-sampling risk. The client is being sued by the customer for defective products, and if they lose, the compensation awarded. This is no way related to the financial statements. You have to focus what is related to the financial statements only. That is related to the audit risk. Is it right? This is the business risk. A client is being sued by the customer for defective product. Is it not? We are not talking of the financial statement. The publicity could damage their reputation. Fine, we are not. It will have a what? It will have impact on the business. Is this right? The client will have to spend a significant amount of money. We are not concerned about the client. Is it right? Amount of money on improving the quality and control procedure to avoid the same defects. Is it right? It is also related to business risk. Provisions. The moment you say provisions, is it right? It is related to financial statements. May be undertaken, understated if the probable payment result from the court case will be recognized as a liabilities. They are mentioned very clearly that, see, MCQs are not difficult. Only thing is MCQs are very closely monitored, as simple as that. You should understand how the things have to be worked. If it is going to be related anything to the financial statements, it is going to be identified as a audit risk. Is that? And audit risk must be described in terms of a risk of material misstatements. That is the impact on the financial statements. A detection risk by the auditor may not detect the misstatements. Is that? If provisions may be understated, if the probable payment resulting from the court case, then you should make it a point that how it is going to be affected to the financial statements. Now, what is the right answer here? See, they mention what? See, immediately what we will go in our mind when we are saying the payables days ratio, we'll say that payables divided by cost of sales. Is it right? Into 365. This is the standard formula. Is it right? This is the standard formula as such. Fine. Now, what is they mention is January to October inclusive. Is that January to October? Is that literally you have to make it a point? Is that 31, 28, 31, 30 days? Okay? January, February, March, April, May, June, July, August, September, October. If you add all, it will become how much? 3604. See, people will see, very simple. I'm telling you now, students will say that yes, it is very simple. Yes, I have done 365 days. But you will not see that January to October inclusive. The moment you focus on that, you have to be very specific. Which of the following is an analytical procedure? Analysis means what? Analysis means you have to calculate for the last year. Is it right? You have to calculate with the last year with 21, 2020 and 2021. Yesterday I gave you one example, if you remember rightly, that I gave you example of what? I gave example of depreciation. Is it right? 20,000 last year, 45,000 this year. Is it right? What you are doing, you will analyze it. Is it right? You are going in detail. Is it right? Why there is an increase of depreciation. Here what you will do, you will want to know the reasons. You want to know the justifications. If we are talking in terms of reasons and justifications, it is nothing but analytical procedure. Is that calculation of gross profit and comparison? Is that of the previous year? Is that comparison of the previous year? What we have done, we are doing it. You see, we are doing it for the current year. Is that we are doing it for the current year? We are doing it for the previous year, 2021 and 22. We are talking about the reasons and we are talking about the justification. What is the question they are asking? They are asking is which is not a analytical procedure. Is it right? Which is not an analytical procedure. Comparison of gross profit margin and comparison with the previous year is analytical procedure. Comparison, again, month by month, it is analytical analysis. Comparison with current year with the prior year is analytical procedure. Here we are doing for only one period. If we are doing for only one period, it is not an analytical procedure. Is it right? It is not an analytical procedure. Recalculation is not an analytical procedure. Evaluates relationship between the data assets. Fine. Now, what is the which one is following the not the ratio? Very simple ones. Okay. Tomorrow I will start next lecture. Sorry, tomorrow means next week. Okay. Can we have class on Sunday? Is it okay with you? We'll do section A. Just I'm asking you. Is it okay if you have class on Sunday? Yes or no?
What time, sir? It depends on the time.
You tell me. You tell me time. I'm giving you option. Everyone.
It will be every week or for this week
Only this week. Because it is a holiday, we can do some more practice. That's all. Understand? We can do.
Yeah, got it.
We want to do only practice because before examination we got a chance. See, again, in national holidays we cannot do. Very simple. It is just before the examination. I don't want to disturb you during that time. Is it right? I will send you message on the group. You respond me, everyone. If you are agree, then we will have class. We will do only examination questions. As simple as that. Fine? We will not do anything. Only examination questions. Whatever the topics we have covered, on that basis only we will work it out. Inshallah. Your choice. Is it right? Your timing, your convenience, it's your flexibility. I am giving you that option. At least we will have some for 1.5 hour or so. Is it right? Inshallah. Now, which is not the ratio? Definitely gross profit margin is the ratio, acid test is the ratio, it is right? It is not the ratio. You have used the management accounts to calculate gross profit margin and found it that the ratio and found it to be higher than the prior year figure. Is it 2019 and 2020? Okay. Last year gross profit is how much? Write down this on that immediately. Unless until you don't put pen on paper, you will not understand. Last year gross profit margin is 15%. This year gross profit margin is 22%. Okay. Which of the following you provide a possible explanation? Sales prices has been reduced to increase the sales volume. We are talking about only one variable. Is it right? See, what is the gross profit? Gross profit should be related to sales divided, gross profit margin, gross profit divided by sales times 100. Is it right? Sales has been reduced. It's only a one variable. Is it right? It's not two variables. It is only a one variable. Is that? It will not have effect. Is that what is the gross profit you are talking about? Gross profit is nothing but sales minus cost of sales. Is it right? Sales minus cost of goods sold. You will get gross profit. Now, prices charged by suppliers have increased, but the company has not increased the prices. Is it right? Prices to customers to cover the increased cost. Is that prices has been, see the things, you put like this, very simple, okay? You put like this, very simple. You have to put by numbers, okay? Point number option B. Prices charged by suppliers have increased, but the company has not increased the sales price to customers to cover the increase. What is the sales? Assume that sales is 20,000. Is it? This is for year 2019. This is for 2020. Is it right? Now, what they have, prices supplied by prices charged by suppliers have increased, but the company, see, these sales they have not increased. Is it right? But what happened? Cost of sales has been increased. Assume cost of sales is 18,000. I will not put 18,000. 1 minute. Is it right? Cost of sales is what? Is it? Cost of sales is what? Cost of sales is 14,000. Is it? Prices charged by suppliers have increased, but the company has not. Company has not increased the sales prices. Is it right? Here the cost of sales is how much? Cost of sales is 18,000. Increased. Okay? Cost of sales has been increased. What is the effect? 6,000 and 2,000. What happens to gross profit? Gross profit has been decreased. Is it? Gross profit has been decreased as such. Is it? Gross profit has been decreased. What they are saying? You have used the management account to calculate gross profit, and it is found that to be higher than the previous year. Is it higher or it is lower? It is higher or it is lower? If you take the point number B, is it right? If you take the point number B, the gross profit has been decreased. Is it right? If you take point number B, gross profit has been decreased. Is it right? Gross profit has been decreased. Definitely it will not happen. Now, what is there? Closing inventory has been overvalued. See the things. Closing inventory is overvalued. Point number C. Is it right? You have the sales. What is that? Cost of sales is what? Cost of sales is opening inventory plus purchases minus closing inventory. Okay. Now, sales is how much? Sales is 20,000. Fine. Sales is 20,000. Okay. I am using another marker. Okay. I am using a different one. Is it right? What happens? Opening inventory is 10,000. Purchases is 2,000. Closing inventory is 5,000. Okay. Just make it a point. How much is there? 12 minus 5. Cost of sales is how much? 7,000. Gross profit is how much? 13,000. Okay. The closing inventory has been overvalued. Assume in the second option 10,000, 2,000. You have the closing inventory is instead of 5,000. What we have done? Closing inventory. Assume the closing inventory is how much? 8,000. Overstated. Okay. Overvalued. Now what happens? How much you are going to? 10,000 to 10,000. This is 10,000, 12,000 minus 8,000. 12 minus 8, it comes to how much? 4,000. The gross profit will be how much? The gross profit will be 20 minus 4, it comes to how much? 16,000. Here what happens? The gross profit has been increased. Is that the gross profit has been increased? What they are asking? They say that and found it that higher. Is it right? It is higher than the previous year. Because of what? Here what result? The gross profit is 13,000. What is the reason? The reason is because of the inventory. You have to work like this. Point number C is that administration of, point number D, administration of expenses nowhere related to the gross profit. Is it right? Administration expenses is related to operating expenses, and it is related to what? It is related to operating profit. Is it? There is no way we are going to have this. Is it right? Means what we have to make sure that, see, you have to write, you have to make sure that these concepts has to be more clear. Unless until you don't put the numbers, you will not understand. Yes, please.
Can you repeat again this calculation which you have
Yes.
wrote it?
Yes. Okay. See what they said. They said that closing inventory has been overvalued. Overvalued means what? How much you have to show? You have to show 5,000. Is it right? But how much you have showing the closing inventory? Closing inventory you are showing how much? 8,000. Is it? You are showing. Or what is the result of this? What is the result of this? Is it? Result of this is cost of sales will be how much? Cost of sales, here the cost of sales is 7,000. Here the cost of sales is only 4,000. Is it? Now I will write it like this. Is it right? You have the sales. Is it right? You have the sales. Is it? Continuation to this. Is it? You have the sales of how much? You have the sales of 20,000. Is it? You have the cost of sales. How much is the cost of sales? This is the right one. How much is there? 7,000. But how much you have shown here? We have shown it overvaluation. Is it right? Cost of sales is how much? Cost of sales is how much? Sorry, we have shown less. Is it right? We have shown less. Why we have shown less? Because we have closing inventory we shown more. Overvaluation. Is it right? Closing inventory what? Here the closing inventory. Is it right? Here the closing inventory is overvalued. We have to show closing inventory 5,000, but how much you have shown closing inventory? 8,000. Is it? What is the formula for cost of sales? Opening inventory plus purchases minus closing inventory. We are not changing the value of sales. Value of the sales remains same. Okay. Only thing is we are talking in terms of closing inventory. Because we are overstating closing inventory, the gross profit will increase. That's the rule. Is it right? Whenever closing inventory is more, gross profit will increase. Closing inventory is less. Is it right? Closing inventory is overvalued. Okay. Closing inventory is overvalued. Gross profit will increase. Closing inventory is undervalued. Gross profit will decrease. Is it right? That is the reason. If closing inventory is overvalued, a larger figure will be deducted from cost of sales. Is that? Instead of deducting 5,000, how much you have deducted? You have deducted 8,000. By deducting more cost of sale, more closing inventory, gross profit will increase. A and B will have the margin to, means that is the reason of the why there is a higher amount of gross profit. We will say that yes, it is only related to no, unless until you will not put the figures with explanation, it is very difficult for us to understand. Is it clear? Is it okay? Yes, Fatma. Other I should explain it again. Yes, Faiza. Should I explain you again? Okay, fine. No problem, Faiza. Okay, then I really appreciate your feedback. That's very important. Okay, keep this in mind. Again, I will when the situation will come. It is no. I noted this. When the situation will come, I will explain you in a same concept with different values. Okay, fine. Don't worry about that. Is it? Inshallah. Don't. See, why I say why I'm not doing that is, the reason is almost 8:30. Is it right? If I stress it out, it will be very difficult to capture that one. Okay? You are understanding, you are not understanding in a free, relaxed mood. Is that? That is the reason I'm not focusing, not carrying forward that one. Is that? If I had time, I would have done that. Okay? So don't worry about that. I'm here means I'm here. Inshallah.